An Army financial counselor will spend years in prison after his conviction on defrauding Gold Star families. If nothing else, the story should alert members of the military and their families and pretty much anyone else to use care in picking a financial advisor in the first place. My next guest has witnessed this sort of bad advice and worse and has some tips for avoiding it. Thiago Glieger of RMG Advisors joins me now in studio. Thiago, good to have you back in.
Thanks, Tom. Good to be here.
There's some really bad advice that happens out there, isn't there?
Yeah, there's a lot of really bad actors that are very interested in enriching themselves at the cost of other people, which is a really unfortunate part of the industry, and it can be seen in a lot of industries. And it can be seen in a lot of industries, but particularly in the field of finance, given its complexities. And so oftentimes, people are not exactly certain about what's happening with their accounts, such as was the case in this scenario where people were not really sure about what was happening, what was occurring, what kind of fees were being charged on the account, and ultimately they pay the price.
Yes, well, in that case, they were actually defrauded out of some of their principal as opposed to just paying fees for bad advice. So at some point, you can get bad advice, but it's not necessarily criminal and theft. In this case, it devolved over to fraud. I mean, are there signs that people can watch for possible fraudulent activity?
Yeah, I think the big thing that you want to stay on top of is making sure that you're looking at account statements, right? I'm a big proponent of not following every single day because if you're watching the markets, that could make you very nervous. But you don't want to neglect looking at what's happening in the account. There should be the place or the custodian that the money is there is going to be reporting dollars that are coming in, dollars that are coming out. In this case, I understand there were fraudulent signatures that were a part of it as well. And so money was leaving the account. And if you're staying on top of those account statements, you'll be able to see, hey, wait a minute, where is this distribution going? You know, did I authorize this? Does it look right to me?
Especially if it's a TSP account or an equivalent, an IRA account, then there would be normally, until you retire, no disbursements at all.
That's right. Yeah. Unless you're the one that's initiating a distribution directly with the TSP, there should be no distributions coming out of there. So if you're working with a financial planner or an advisor or someone who is positioning themselves as a financial counselor, and they're presenting you with forms or they're talking through how to make a distribution, moving money from the TSP, you really need to understand exactly what's happening there. Where is it going? Why is it being done? How is that going to help you in the long run? Questions like that.
And then, of course, this particular person who was just convicted, Cars Craffy, or whatever his name was just a piker compared to the greatest Ponzi thief of our time, which was Bernard Madoff.
Right.
And the issue there was the returns were so good and so consistent that he was hiding in plain sight. And so if you see the market fluctuating and you keep rising, I guess nowadays in the latter days after Madoff, that itself is a sign.
That's right.
Too good to be true.
That's exactly right. Yeah. Advisors are not miracle workers. When we create portfolios for clients, we are participating in the markets for clients. And so if the markets are going up, clients should be going up. If the markets are going down, you should be going down with that. There are a lot of products out there that pitch guarantees. A lot of federal employees are often pitched these products where they will say, well, you protect your principal. The money can't go down ever. And those are usually built around insurance policies, so that's how there is some protection there. But again, that too good to be true should always be in your mind. You know, if something is seemingly like it's going to protect you constantly, asking those deeper questions, how does this work? If you're not fully comfortable or you don't fully understand how the investment product works, I always like to start asking more questions and make sure clients understand.
And sometimes the assumptions might be rosy, even though it's a legitimate investment. About a year ago, I was on a mailing list for people that operate wells, oil wells. And I did some research, and they seemed like a legitimate company going back some time. I looked at third-party sources and not just their website. I also looked at the map of where they said these sites will be. And, yes, it's a huge area of the country where some drilling is going on. But their assumptions on crude oil prices seem to be pretty good. And plus, they wanted a substantial investment in a piece of this and so forth. And our advisor said, well, just buy some oil stocks if you want to do that rather than try to be a well person. Mm-hmm. So that kind of exotic thing also is something to maybe, take a second look at.
Yeah, the commercials, Invest in Belize, that maybe you've seen on TV, and those kinds of things. They're called direct participation programs, where you go in essentially as a limited partner. So you sign this agreement saying you're going to contribute X number of dollars. And there can be some interesting tax benefits from that kind of stuff, write-offs and things like that. But I would venture as far as to say for most federal employees that I have seen, it's really not the most advantageous thing because it's so hyper-specialized. And again, thinking about an investment as a tool. You go to Home Depot, you go to Lowe's, you're grabbing a tool for a project. Investments are the same thing. What kind of tool is best going to be available and useful for you to support whatever you're trying to accomplish, whether it's retirement, college funding, buying a house, whatever it is?
We're speaking with Thiago Glieger, a private wealth advisor at RMG Advisors of Rockville, Maryland. And there's ads on TVs for firms that are fiduciaries. And that's considered, I guess, the gold standard, someone who has no alliance to a particular fund or set of investments. But is that always the way to go? Are fiduciaries really the gold standard, or can you do well with someone connected to an operation that makes a profit off investments?
Yeah, I think that when it comes to your personal financial future, you have to understand whether somebody is giving you advice toward that end or if somebody is offering you a specific product. And so if you go and you buy a car or you buy a life insurance, you buy a house, those are very transactional type of businesses, and that can be totally fine. Somebody is selling you a policy. They're not necessarily operating in a fiduciary capacity, and that's okay. But if somebody is giving you advice about your financial future and really these very large transactions that are happening, I feel that somebody should be a fiduciary because legally somebody that is a fiduciary is one who has to act on behalf of somebody else and is legally bound to act in their best interest. And so, I think beyond that legal obligation, I think it's also an ethical one, and in this case, there was a tremendous breach of ethics from this counselor when he was making recommendations to people to do things in their accounts that was really more beneficial for him in the terms of commission and all kinds of other things rather than what's going to help that family.
So what are some of the questions you should ask, then, of anyone trying to sell you something, or fiduciary or otherwise?
I think the first question is always asking them, are you operating under a fiduciary duty? Is that in an agreement somewhere? Because if they are, that there has to be a legal statement that's written that they sign saying they are acting in a fiduciary capacity to you. I think there's also questions surrounding whether or not they can help you beyond just the investments. I think someone who is operating in a fiduciary capacity is talking to you about things like taxes and health care and things that matter to you, like your family and how do you want to spend your time. Those are signs that someone is interested in your well-being, not just necessarily interested in getting you the best or hottest investment.
Yeah, one of those areas is as you approach retirement, there's lots of complicated decisions with deadlines connected to it, especially if you're going to be anywhere near Medicare, which is a Byzantine system.
That's right.
Someone should be able to help you with questions like that, for example.
Yeah, and Medicare planning, Social Security planning. There's over 500 different iterations of filing for Social Security, and sometimes even the information online is very overwhelming. And so doing the planning, looking at different options, whether one scenario was better for you. If you're married, should one of you file first and then the second wait until 70? Should you both wait till 70? All kinds of other things that are well beyond just what are you invested in.
And the other issue is tax policy or your reaction, how you deal with tax policy. So can a fiduciary, are they necessarily tax experts, or can they know enough to make sure that you don't make a mistake and pay taxes you shouldn't have to?
Yeah, there's a pretty fine line between tax planning and tax advice. The IRS wants to make sure that somebody who's not registered as an accountant is not giving somebody tax advice. But I would go as far as to say tax planning is a big part of a financial planning process. It's when you're retired, especially, it's the first time that you are in control of generating your income. If you have a first pension, as federal employees do, obviously that's taxed. You don't have too much control over that. A big part of Social Security is also taxed. But everything else, all of your savings, how you choose to make withdrawals, what you're invested in, the kinds of things you're doing during the year with your assets. Those are all things that are influencing your taxes, and making sure that you're making use of Roth. I know we've talked about that before, so that you don't have huge RMDs down the line. Those are all very important questions and